All right, so we're just going to break down higher time frame into lower time frame. Um, let's go over this past week, and we'll look at the days of the week, and then kind of get into some lower time frame stuff. Um, so as you guys know, I've been talking about this being the draw, and then we'll see what happens when we get around this area. But just for some structure type notes, back on this side of the curve, we're in a sell model right now. This was a buy model. You have like an order block that's placed. So here you had an imbalance down here. Notice how you had a new week opening gap that came down here, and we run up. Remember I said we always need to put in a false high or a false low before we continue with the move. So on the weekly, this was that. Rebalances, look where this candle closes. So what was missing right here was some down close candle. And then we get that with this week coming down, then immediately changing the state of delivery. And this is kind of used as an order block. And so this will happen where then when you start getting the sell side of the curve, order blocks and some fair value gaps should kind of line up, which is why we have inversion fair value gaps. So notice the week prior to this last, it was consolidating on the daily, and basically we got an order block put in. And so what we wanted to see was price return to an area of fair value for selling and then continue lower. So, and you can back test this on like the 5-minute chart. Um, when price is moving into either a sell or a buy model, you'll see order blocks right across from each other. So nevertheless, we got the consolidation on the daily, a weekly order block came up, ran this weekly fair value gap. Let's see here. Okay, there's the daily imbalance. I had this marked up, but we basically went to the CE of this fair value gap was the high. So if I just throw that in there, price goes to CE of the fair value gap and rejects. Okay, and then we have a strong close, right? Because prior to we're having this kind of like rejection out of the CE of this previous order block. And so we'll just, for visual sake, we'll just take a look at that, draw this over here, and you can see how candle bodies aren't closing, right? So it's the whole get people off sides, blah, 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 like we always talk about, and then really drive through where price is wanting to go. So higher time frame, and we'll look at some points of interest on the daily over here, but this is what I've been preaching is a higher time frame, an order block that's already been used once, twice, and we have equal lows right there. So really great target on the weekly structure. All right, let's get rid of this. Okay, that's a nice little beauty right there. Get rid of that, and let's go to the daily. Okay, so when we're talking about higher time frame structure, and again, feel free to back test this on lower time frame, so you have more back testing opportunities. But when we take out highs, lows, or fill in imbalance, we want to see an opposite reaction, or we want to see the same type of reaction happen in the opposite direction of where price is wanting to go. And so if we look at this sell side of the curve, what we did is we came down here and this area became balanced. Okay, so this needed down close candles to come into this area, and we got that with the week where we finished off, kind of retrace back up, but we finished this in balance. Here's the week that we put in a weekly bearish order block. And so when we have consolidation like this is a balanced area. So when we go back and look at the sell side of the curve, in my weekly reviews, we had talked about that we don't need to come back up and balance this anytime soon because this was already driving through an area that was pretty much balanced and just balancing anything that had some small imbalances along the way. Once we left this consolidated area, okay, look at what price does. It left one imbalance here as it left that consolidated area, but it came back up and rebalanced that for the time being for more sell side activity. And then on the way down, look at all these wicks. There's no fair value gaps in here. The only imbalance that was left in the daily was the gap down from Friday to Monday, a new week opening gap. So after the consolidation, these aren't price reversal patterns. It's very wicky. Um, it's a lot of candles covering each other, but really not making an extensive push upwards. And so we have to recognize that just because we're consolidating and then we have this move up doesn't mean that prices are now going to be, this is going to become a bullish run. We have to identify the imbalances and say what happens after we fill the imbalances or take out a previous high, which we did both, right? So here's a swing high and we take that out and we fill the imbalance. And so on last Sunday's weekly review, I was talking about that I wanted to see Monday open. I wanted to see a manipulation down here, which we didn't get. Okay, it just gapped up and went for it. But as I bring this across, this was missing up close and down close candle. Tuesday we get the up close, run the high. I believe ICT posted this on his chart that said study this. And Tuesday, CE of this wick is where Tuesday landed, and that became the reversal point. And we have Wednesday. There's a lot of Wednesdays on here. As we get up here, we have quite a few Wednesday points of interest above this high. This mean threshold, and we ran the previous day high, and then we start creating the down close candle that needs to go through here. Okay, so again, we didn't get as much of a retracement up. I wanted to see the weekly fair value gap. I kind of wanted to see it wick higher above the CE of it and then come back down. But price just didn't do that, which is fine. You just have to watch what price is willing to do. And so all it wanted to do is run the previous day high into a point of interest, a Wednesday point of interest, which was this, again, like a previous order block. Okay, this area of consolidation, Wednesday mean threshold, and boom, we get the dump down. And we dive, almost looks like we nailed just above the CE of this wick right here. So we nailed the CE of this Wednesday wick. Okay, that was the final product, which, oh, I did have that marked. I don't know why I got erased because I remember taking a trade down in there. Which, look where it sits below. The CE of this Wednesday wick sits right below Monday's low. into this imbalance. Okay, so all this when we're looking at um, points of interest and well, what levels are we looking to tag? There's two things that we're looking at is one, what is price willing to do? And two, where is their confluence with these points of interest? And the confluence of this was the new week opening gap and Monday's low. Again, we're looking for trades in the direction of order flow. Okay, so it's okay for taking longs into this initial part of the week. And you can see if you got in anywhere here, Monday ran these two Monday highs. Kind of gets into the CE of this new week opening gap. Tuesday manipulates lower, almost to the low of this, and then comes up and fills the gap to the CE of this wick. So this wick had a couple of points of interest that Tuesday used, and those would have been the targets. Wednesday, now we've filled this imbalance with a up close candle. Wednesday, our bias is going back to where we had it, which is we are in bearish order flow with uh, a sell side model currently playing out on higher time frame, and so we're looking to jump back into shorts. Thursday, we're not looking for any kind of major move up, and we're looking to take shorts. So this kind of fills in this gap. Thursday does, and then Friday finishes filling the gap in. You have, we'll look at Friday levels and just kind of go over that. I posted that in the, I believe under general, or I might have posted under the daily, but I gave you the 5-minute chart for Friday. Okay. And then again, if this area is balanced, there's no need for Friday to not jam through all this, because if there is any imbalance, which there doesn't look like there is any, even the smallest bit of imbalance like this, it doesn't need to stop and reject there. It just needs to cover it because we're looking for lower prices. Okay, so we want to expect when we get setups like this, we want to expect big movement on these days that are going to move through balanced areas in the direction of order flow. I'll leave these on for now. Okay. So if we continue into next week, we have Monday, no news. Tuesday, PMI jolts. Wednesday, non-farm employment change. Thursday, we got PMI. And then Friday is non-farm payroll. Okay, so we got some decent red folder news. Tuesday, Europe has CPI, so we could see, and then their federal bank, the European Central Bank president, is going to speak. Okay, so you got a couple times London moving into New York of we could see some heavy manipulation and just kind of heavy price movement. Okay, so let's look at potential for next week and what we have on the daily. So we're really not that far away from our swing lows, the equal lows. If I just measure this out, 1,200 points. With volatility being so high, that's easy for a week to cover. And we've seen it back here. The first target that I'm looking at is this daily imbalance right here. And so all we have through here is, like we've talked about in the past, the up close candle. We need down close candle through it. The candles that are around here are a Tuesday, Wednesday, Thursday. Does that land through here? That's quite possible. And then we kind of have this large Monday candle. Um, and so we have the opening of Monday and an opening of Monday right here, kind of both sitting at this level. And then a couple other like points of interest right along the same level. So I could see maybe some manipulation back up here where we have this previous Monday low. And if we look at this previous Monday low and scroll all the way back here, we got Monday highs, Monday highs, Monday low. Okay, so kind of all line up in this point of interest. So if I'm planning out for Monday, it would be nice to see a manipulation back up into this area. And then since we have no news and we had a huge Friday down day, more of like a distribution style for Monday. So maybe a candle almost like this Tuesday, not a huge range, but kind of covering itself back and forth and creating that distribution reaccumulation type candle in this area here, and maybe targeting what would be the low of this previous imbalance is going to be 19,128. Tuesday, I'd like to see a run into the fair value gap, and it might not. This could be another breakaway gap, um, but I like to see maybe like an institutional order flow and come back somewhere maybe in this CE of this wick, depending on where the high of Monday gets set, and then continue lower. This right here is kind of like almost like an initial, like here's a rejection block as candle bodies came down to this wick and then move higher and bounce and continue on the buy model. So possibly Tuesday ending somewhere around here. I'm sorry, where was I at? Tuesday, yeah, Monday, Tuesday. So here's a Tuesday low that sits kind of like in the like a previous order block, temporary order block, and we could see that this low, the mean threshold of this Tuesday candle, kind of high over here, has a nice little point of interest for price to kind of run down in here and show initial rejection. And then that kind of gives us our like Monday, Tuesday prior to NFP Friday. And so for like Wednesday, Thursday, Friday, if we just look back on the weekly real quick, we do have some imbalances down here. And depending on how low we're going to take the market, um, I'd like to see how we react out of here before making any kind of like judgment or bias towards where the later half of the week is going to go. So it could be possible that we rebalance some of this area too. But again, just looking at days of the week that are over here. Here's the weekly order block on the daily, and we have Friday and Monday sitting right here. So we could run, Friday could run down here and then kind of reject back out of there. Wednesday, Thursday, this whole area on the daily is pretty well balanced. Minus, if we look over here, again, these are all imbalances. So we have part of this candle doesn't have an up closed candle body through it. We have imbalance right here. Okay, down closed. Here's a bunch of here's Thursdays. Okay, so a lot of see how these past Thursdays, like this Thursday never ran this low, never ran this low. So it's possible that we could get Thursday down in here. And again, like I said, NFP Friday's either going to drive through, and we have some more daily imbalances down here. Like here's as far down as this daily BISI has been balanced. So imbalance, and then some big imbalances down here if we're looking at uh, previous daily structure. So I think either they're going to surprise us with driving through it, or we get some sort of bounce out of here. Um, no need to like really predict that right now what's going to happen. I like to watch and see how price reacts to these areas, and then look for key targets. But as you can see on the daily, there are right here too. So we have no up close candle from this Friday close to this Monday opening. So this new week opening gap. So kind of a bit of some daily imbalances all within this area down here. All right, let's go back here. Um, okay, so I'm going to jump down to like lower time frame. Does anyone have any questions or comments on higher time frame, kind of what I'm looking at, my reasoning behind it before we move to some lower time frame stuff? Oh, this is also I'm just measuring like how much drop we're getting in NQ if we get down here, and it's only a 20% drop. So, we've seen that before. And you can take this and just measure like this from this previous high all the way down here. That was a 16.8% drop. So let's see what we go all the way back to um, COVID highs to the lows. Okay, a 33% retracement. And that was after the COVID crash and then the rally to all-time highs. So, that's not it's not crazy for price to, even if we take right here all the way down to like this fair value gap previous high. Okay, we're still only looking at 25% in starting the early part of the year. So I know a lot of people on X are kind of like, and the media is kind of pushing this to be like heavily alarmed about the market coming down, but really it's not. anything out of the ordinary other than buying opportunity for your long-term port or retirement for blue chip stocks. Okay, all right, no questions. Cool, let's move to lower time frame. And let's go over some of these previous days, past week. All right. Okay, so this is the chart I posted earlier today, and we're looking at time frames. So market opens, and I believe it opened up right here. Again, notice Thursday fills in a good part of this new week opening gap from the gap up Monday. Okay, we get Wednesday that throws a wick in here. Thursday we get movement through it, and it ends up closing at pretty much CE, just below actually. Okay, but we're starting to get lower time frame price movement through this area, right? Starting to paint it in and balance it. As we're expecting lower pricing, market opens, taps the CE of the new week opening gap, drives lower, starts putting in false lows, takes out a previous low, and then here we go. We'll talk about this again. In a lower time frame sense, an intermediate term low gets ran. And so what do we need to do? We need to come back and we need to rebalance anything that hasn't been rebalanced. Okay, so we have this market opens and look what gets put in here. A wick covers this whole SIBI, and this kind of just balances on itself, and then we get these progressively lower candle bodies till we run the low. We have a Friday close, and we have price that comes back up, and look at this whole leg down, gets rebalanced. Along the way, it starts putting in these false lows and false highs. We're looking for shorts, so we'd want to see an accumulation above a Friday point of interest. Okay. And so I highlighted this area because, again, if we have price that is looking to really run lower, then Asia is going to set the high of the day. And if I bring up the Asia range, Asia sets the high of the day, and it gets one run stop to finish rebalancing this area because it stayed pretty consolidated most of the session. And where did it consolidate? It consolidated above a previous Friday close. Run stops, rebalances, and then drives lower. Runs out the equal lows. And now we have a couple Friday points of interest. And we just want to take note of look at how price reacts and price structure in these areas. Okay. Notice how this low was created and you have like temporary, I'll just call these like temporary order blocks, right? Because we ran a previous intermediate low, and then price changes direction off of it. These are holding. So again, in that same area where this was once a rejection point, is now after the first move down, is now distribution reaccumulation, right in the mean threshold of the previous Friday. Okay, and then we have the dive lower. Friday open puts in the false high. All it does is comes back down to rebalance this area, creating a false low as well. See how that's a very tiny body, so it just comes back in here. Any little tiny imbalance, it wicks into there, drives through Friday opening price, uses it as support temporarily. And what do we have? We have an imbalance. Okay, this was a breakaway gap, so now we need to see price come back into the breakaway gap. You had a little bit of institutional order flow right there, but pretty much this was left unbalanced. And what you'll notice is this is really good when equilibrium of Asia, if London holds this. And you see sensitivity around here and you see points of interest that line up with the mid-range of the Asia range that was set. Okay, just like how we talk about overnight session with some of these ranges in here and how we use the mid-range point for potential points of interest. And so we get that right here. Comes up, rebounces into an area fair for selling, rejects, just balances itself, gets this fair value gap, keeps getting tagged, sell off, sell off. One last run up here to run these highs. And as the market's starting to open, we see a heavy sell-off rebalance. And then this fair value gap is used and the mean threshold again one more time, as this is like an order block, starts pushing price lower. Okay. And again, look at where all the overlap is concentrated around. Friday opening price. Okay, so as we're looking for entries, you can see that the shorts are being built anytime price is reaching above a previous Friday opening price. And every time it comes up here, we start selling off. Comes back up, we sell off. Okay, all these wicks holding underneath the mean threshold and into this fair value gap right here. We'll just look at that without these on. You can see it a little bit more clear. Okay, so it's not, you're not always going to get like this type of reaction where you get nice easy taps and then price moves away. Again, on some of these daily points of interest, you're going to get the building of orders around that area because it's trying to throw people off sides, right? As New York Open happens, high volatility, lots of volume, but just look at how prices played out with the bias of shorts being continued. And then along the way, you can see we get reactions. I didn't mark out I did mark out that low. So we got mean threshold. Look at that. It's the first reaction. So price taps it and it wicks back up, but then it drives through it very quickly. The March 21st low, which was that previous Friday low where price was building all on this previous Friday points of interest. Again, we hit it and then now we start getting the consolidation around this area, but we're not showing signs of reversal. It gives you that initial head fake, but then it drives through. And so then anytime price comes above this low or into this low, it sends price lower. So when we're looking at this, let's find points of interest above this low. Like if you miss this move, you could still get in for a decent amount of points. And if we just look at price structure, let's make this. Okay, so if we are anticipating order blocks to get put in, bearish order blocks, look at where the bearish order block gets put in. Remember I told you that you're going to see this when you back test it on lower time frame too. So take that same take the same knowledge and use it on higher time frame for your advantage. Oh, order block. Look what happens. Back over here, bullish order block was placed. Price goes up and down, fails to continue lower. Every time we reach in here or below the close, price wicks away or continues up and then uses it to send price upwards. Well, now on this end of things, because we're on the sell model, we have it placed in that same exact area. However, now bearish order block, and look at every time price touches it, it's selling off. Here's your entry into here, and here's your stop right above here. Okay, and if that's too much, because that's a 40-point range, okay, then you can either like lower your leverage, or you can stagger orders. And what I mean by staggering orders is you can grab this range right here and say, okay, I'm going to just try to grab anything that tags 50%, because then at least I'm getting something at 50%. And from 32 to 46, oh, I kind of like having 14 points as more of a comfortable risk management and stop, versus getting in at the bottom of the order block. And maybe this is all you get, okay? But there's also opportunity to add in there once you see um, what kind of reaction you get from that. So a couple times in here, and then it runs this previous high, and then now we're selling. Look at it, sold off way hard down into here, but it just came back up. So then this could be, here's a inversion fair value gap. Maybe now you're adding another couple orders right here. Okay, and that'll bring this down to here, and then now you move your stop from here to this previous high. Okay, so it's all, and again, if price is going to run in that direction, it's going to go. So even if it does send up a, let's say a wick and stops you out, like let's say this one sent up a wick and stop you out, as it runs all the way back down here, you can still grab orders in this order block after you got stopped out and reset your stop to the next high. You just have to be managing and manage your expectations of, okay, if this was a run stop because price should continue lower, then if I get stopped out, I could still grab orders in here, now set my stop to the high that just got stopped, that created the run stop. And I'm just giving you examples of because price isn't always going to do the same thing every single time. But if you have that in your mind and kind of set different expectations for, if price does this, then I will do this, then you're not like grabbing something way down here and then price comes all the way back up and you're either deep red or you're panicking and getting a bad entry. Okay. So then again, price drives through the Friday before previous Friday's low. Again, distribution drives through it pretty heavily. Now that's holding it. Again, another order block. We had this high ran expansion from these. And so now we're looking at more entries where anything above the 13, 14 low in this order block is sending price. Okay, initial sensitivity off the mean threshold of that big Friday candle body, but then drives through. Okay. No reversal patterns, starts using this level now after it distributes, reaccumulates now as resistance, continues lower. So that's kind of walking through and managing expectations, using these levels, identifying price structure, and what I would expect to form at these levels based on the higher time frame bias of price should continue to be running lower. All right, do we have any questions on that on this past Friday? And are there any questions on any of the previous days before Friday? Yes. So um, when we look at structure, fair value gaps and order blocks will be placed in previous fair value gaps and order blocks. See if we can look at some of this stuff on the hourly. It might be too. All right, we'll go back to the 5-minute. Okay. So 5-minute, we have price that runs a low. Okay. And if I was just trading price action and structure, this candle runs the low. We fail to close below the low of this candle, and we end up closing above the opening price of this candle. Okay, so I'm going to draw a line from opening price. Okay, and now this is being used as an order block. Price rejects off of it, rejects off of it. Okay, price unwilling to drive lower into it. So because price wants to continue lower, I would expect to see a bearish order block placed somewhere in this same general area that this temporary bullish order block, right, because price was holding, this was holding price above it, was placed. And so we have this manipulation leg that ran the highs and finished rebalancing these areas. Okay, here's a balanced area. It runs that failure swing and candle bodies okay, pretty much touch the CE of this balance range, right? Wick kind of runs above it. That might have been a devil's mark. I can't really tell. Let's lighten that up a little bit. Okay, so this is a manipulation leg. Rebalances this area that needed complete balancing and runs the highs. All right, so now we're looking at price should return into this manipulation leg. Okay, so here's the start of it. And we get the return in here. So price runs up into it and then expands away, filling part of this SIBI. So within this previous order block, now we're getting a bearish order block. So we have a series of candles, okay, that start the, dang it, that start the run up into the previous manipulation range. Okay, right? Little temporary high set in, and then this runs up back into the previous manipulation range, sends price away, order block placed. So see how we should expect an order block to be created where a previous order block was created. And now look at how this order block holds price. We don't get any candle bodies coming up in here. It's all every time it wicks, sells off, wicks, sells off, wicks, sells off. So we're just like defining the logic of price should create order blocks and fair value gaps where previous ones were at. Okay. And so like if you look at this manipulation leg up, why didn't we get why did this candle close down here and nothing returned to this? Because again, we have a fair value gap, and when you have these fair value gaps, it's just an area of imbalance. So all we need is it could be the same size candle that just comes through and balances it. It doesn't have to be high resistance like this or overlapping. And that's when you get like your BPRs and um, just another form of BPR, right? Balanced price range. Uh, Previous opposing ones are not always opposing. Yeah, you want to see them opposing. So again, going back to the daily, I'm sorry, weekly. Remember I said that this was kind of like a temporary bullish order block. We drive down, rebalance, drive back up, and then anytime price comes into this price leg, like look at these weeks. It gets tagged once, twice, and it's sends it up. So we want to see a bearish order block placed in here. And there's different styles of order blocks. There's order blocks where you get um, this, where you get a run into an area of liquidity, and then it expands away and it gets used like this. And then there's order blocks that are placed in line with the direction that price is wanting to run, right? So you're not just going to get like 10 straight weeks of price running up. At some point, it wants to put, you know, an order block in. Well, if you look at this weekly price leg, really this is an order block midway that was placed in this directional movement of this weekly run up. Yeah, it's good, Doc. They're bookmarks. So technically, this manipulation leg down and then price expands heavily. Look, you got 2 weeks of down close candles and price heavily expands up and continues. Well, technically, this is an order block. It rebalanced an area of imbalance, right? BISI, gap. Look at how we get multiple wicks through the gap, and then we finally get the down close through it, up close through it. But previous high into an area of imbalance. It's all buy side. And that I would venture to say that this is probably 50% of this leg. And so if I measure this leg of the candle bodies, okay, to the first down closed candle where it's just all up closed, it taps 50% of that leg. So drives back into discount, which lines up with the previous high, and then takes off. Okay, so this drive into discount, running out these equal lows, rebalancing this area, this is an order block candidate. And we do have this imbalance. So is there potential for price to get down here? Yeah, there sure is. This might be used twice and maybe it drives through it the next time because the overall target is maybe to balance this area as well too. Because if we really look at coming back here, the only imbalances left are going to be down here, and then above that it's this area. Right? We have up close candles through here, and the lowest down close candle came to right here. So this is the only area that has 0 down close candles. So who knows? Maybe this is the halfway point of a weekly leg going down. Notice how they like to put, uh, like sometimes they'll put order blocks in the halfway point. Like if we look at this price leg right here, dude, kind of get that order block that's right around the halfway point, the initial not rejection, but expansion through the high, and then order block that place right through here, right at the halfway point. So if that's somewhere near a halfway point, if I just go to the mean threshold of that, and that's just guessing, but I'm just showing you like there's possibilities of that because we've had all these down weeks and then a very small green week and then it runs the fair value gap and really drives through it. This whole leg right here, that could be the halfway point of this leg. And then just take it to different parts of that candle. So if it puts it at the halfway point, well, fuck, look where that lines up at. Right back down into this potential order block. And so this is what I do with higher time frame, and I study price legs. Like here's another good one. Wow, this price leg where weeks are just driving up. Oh, halfway mark, order block, drives up, tops, rebalances. So if it does it in other price legs, is there potential for it to do it in this price leg? Yeah, sure there is. So it's just giving yourself like, let me look at, let me study price action. And you just have to look at price action all over the place and take measurements. This is all because all this is run by like if it's algorithms and mathematics, and it's kind of proven that a lot of stuff is mathematics related, obviously, then we should have repeating similar mathematics happen all over the place. So, and that's how I gauge potential by kind of looking at structure and saying, okay, well, this is a very small green week after several weeks of heavy down close candles, not high resistance, low resistance, just driving. Um, and you can see plenty of examples of that too, where price will drive through previous order blocks because it's hunting something lower. So it's not gonna, it might give an initial reaction or it might react out of it a couple times, and then the next time it could totally drive through it. And last Friday is kind of a good example of that on the daily, right? Because it's pretty balanced in here. So it's you're getting all these reactions. This area is holding 50%. It's coming down. It's coming back up. We wick back into this candle again. This down close candle going up. Oh, we really jump out of there. And then what does this do? It just drives right through it. Like it's not even messing around anymore. It's like, no, we don't need to bounce out of this area anymore. We bounced it and did that enough to time when we need to get up here. Now we're just driving through this area. Anyone have any questions on the lower time frame and levels for any other days of the week? Does that LB, did I answer your question with like looking at price structure and how you'll see an opposite one form kind of in the same place when it lines up with the higher time frame? Cool. Anybody else? Any questions? Um, I think too, obviously daily and shorter time frames, you're going to get more overlapping movement versus when you're looking at higher time frame charts, obviously. But when we're looking at this versus this type of price action, if we wanted price to move up in this previous week, really what should have happened is Monday should have came back down into this candle, expanded up, and we should have got this Tuesday to expand up into here. Okay, it did not. And so that is kind of the telltale that price isn't willing to go here just yet. And then you can see the subsequent days following that we really just don't get any expansion towards this area. Even though this week I was talking about this being the draw, it was the draw, it just wasn't till the following week. And so that's probably one of the only other things that I probably work on the most is my higher time frame ideas are usually pretty accurate. Sometimes I'm a little early. And so sometimes you just have to limit expectations when you're not getting the follow through that should happen. And there's plenty of examples of that on lower time frame, right? Where price just is not going to make the move until certain times of day. And we kind of see that here. So this was kind of a good example. Asia opens, runs the low, and then kind of just drives up and then really consolidates in this little box right here. And this is the extent of 4 hours of price action. And so you could have taken moves to like want to go lower, and it just wasn't going to go lower because the timing for that just wasn't going to do that here. So when you're not getting follow through, mark up your chart, and when price isn't following through, like, okay, it's going to run these lows. Oh, nope, it doesn't. Nope, doesn't do it again. Oh, doesn't do it again. That should tell you that there's something that it needs to do first before you're going to get the follow through. And so just kind of mark up your chart and start looking at where's potential. And sometimes it's areas that it never reaches. Sometimes you're like, well, look at here. It's kind of like relative equal highs. Maybe we'll get into this fair value gap just above CE of the NWOG. And you have an entry set here and it doesn't reach it. And you miss the high of the session. That's going to happen. It's happened to me plenty of times where I've set orders and been like, oh, okay, hopefully it tags this overnight, and it never gets tagged. So, and it's hard to be able to just monitor price, hours upon hours all night and day. That's not conducive either. So I usually set framework in my mind for like either it's going to play out or it's not. Either I'm going to get it or I'm not, and I don't. That keeps me from trying to force things. I guess other confluence that I use for the week are ATR levels. That's just average true range, so again, mathematics. And when we start breaking down the week, okay, so I have it for multi-day, so the average true range, the levels are going to be for the full week. And so I want to see how price reacts around these daily. So if we were just looking at that on the previous week, this would be like the call trigger. So if price is able to hold this and continue, we should see higher prices. And you can see we just get a lot of, again, this week was the small, um, like spinning top candle, doji candle for the week. But you can see how price just kind of is bouncing between the call and the put trigger for average true price, or the average true range of price. And every time it gets up here, it rejects. Every time it gets down here, it comes back up. Okay, and then we have the new week that opens. Okay, and it's right here at equilibrium is where this closes, and then we gap up. We come through here, we hold it versus what it looked like previous week. And so again, that's a confluence of, well, if we want this gap to get filled up here, and we should see a Tuesday high of week. Okay, so we should see this play out, and the call trigger should hold initially, and then we should see the call trigger get broken down and then be used as resistance. So we get Monday into Tuesday. This is now, even though it's Tuesday, it's a Wednesday candle because Tuesday ended like somewhere over here. Boom. Wednesday runs previous day high. We're about 1 ATR up, and every time it gets above that, it's rejecting. Now it's slowly breaking down. And you can see how it breaks down and reacts around which once was support, now becomes resistance. Distribution right at the same level. Once was support, now we're getting distribution and price driving lower. Retest, can't break through. Okay, and then now we get the opposite, where we kind of accumulated orders between the neutral position and the call trigger. And then finally, and there was a Friday level that matched exactly with this. It was a Friday close, which matches the bottom of the new week opening gap. And you can see price tags this, builds above it, drives through it, support, lower, and doesn't even stop to bounce here, just freaking smashes through it. First level where we talked about, there was Friday levels right here too. Order blocks placed, boom. Drives through it, resistance, drives through it. I think it's about almost halfway between. And so I do like to throw this on for confluence with daily levels. Because again, in my mind, all this is just mathematics. So there's going to be, and that's why so many different strategies can work if you have good risk management. But it kind of helps frame the week for me. Settings on this, I use multi-day. That gives you um, a week. So it's going to have these same levels for the whole week. And that's how I like to use it. And you can kind of just back test weeks. Here's your this is like consolidation. But I mean, again, think of price when you get stuff like this around a level and you don't get a really strong reversal. You have to look at these as distribution reaccumulation in the direction that price is already heading. So like you're not going to try to go long off of this showing support right here because there's too much uh, accumulation right here. So now you're looking at, well, where are potential areas to short? Oh, here's fair value gap, previous lows, mitigation block if you're using ICT terminology. And so you're just building like, again, we're building weekly bias, right? With days, Tuesday high, Tuesday low. Are we going to get um, a doji? So we're having just price constantly move up and down through the week, just basically consolidating on a bigger scale. Some people I know people that use EMAs. There's so many ways to trade. Again, it's whatever works for you personally. That's my belief. Whatever allows you to make a good decision and feel convicted and have good risk management, then that's what your style should be. All right. Anything else? Now's your now's the time to ask questions, or if there's something more you want me to dive deeper on. All right. All right, cool. Then I'm gonna go ahead and we'll wrap it up. Um, yeah, we early on we talked about the upcoming week, so we'll see what happens, and hope everyone has a good week next week, and we'll just continue to learn and progress as traders. You guys have a good rest of your Saturday, and have a good Sunday as well. We'll talk to you guys later.